What's up, guys? Welcome back to Trading Simplified. So today I'm going to review TSM, the Taiwan Semiconductor stock. This is one of the biggest semiconductor companies that you can buy and basically buy and hold successfully. But for me, I've identified a level that I'm going to attempt to day trade, and I just want to break down my trade so you guys can see where my head is at. And if the price goes down to where I'm looking, I'm going to make the trade. And we'll break that down later on in the video. For those of you, TSM, I just want to break down some of the highlights real quick just so you can see. I think this is a very good company to hold long term. It's definitely at a high price right now, but I do believe since we had that new breakout into a new high, we have a nice level that we could trade off of. As you can see, just some quick highlights. Dividends, they pay 61 cents, about 1.16% is their dividend yield, and they pay it quarterly, as you can see here. And also looking at their earnings, they have done very well in their earnings, beating expectations basically over a year straight. If you look at sentiment for them, it looks like long term, Fidelity is saying that it is strong sentiment. And then when you just do the comparisons just to see what other semiconductor companies there are Qualcomm, there is Micron, Texas Instruments, and NVIDIA. Now let's just compare TSM to NVIDIA, just apples to apples, because they're both semiconductors. And they're both, pretty much any company that you think of is going to be these two. But look at TSM's PE ratio is almost 32, whereas NVIDIA's is 48. So definitely price per earnings. That is nice to see. It's a little bit lower. I like that. And shares outstanding, 5.2 billion versus NVIDIA's 24.5 billion. Now, if you're not interested in day trading TSM, I would stick around to the end just to see the level. But you could invest in TSM and other ways by buying potential SPWO or SPTE, and it shows you the percentage that TSM is exposed within these ETFs. So as you can see, high percentage of 15% of TSM is within this one ETF fund, SPWO. If you want a little less, you could do like the global emerging markets at 9.2%. But let's break down the chart. I'm going to use Webull, but at first we'll use Fidelity just to show certain channels that I'm looking at, and then we'll use Webull. If you look at this company just on the max, I mean, look at that. It's gone to the moon. So this is why it's nice if you find companies in the beginning trading at $20, and then here we are at 200 now. But let's go back to reality here, and let's start looking at potential plays here. So when I look at the 5-year chart here, and you put in the channel, so you can go under here where it shows draw, and then click on channel, and then you just draw the channel, and then what it'll do is you click it, and then what you do is you bring it up like this, and then you can create your own channel that it is trading within, just to give us a good idea and perspective. So this is where it is trading within. And what do you notice about this chart? It is all-time highs right now. This is all-time highs trading at that 200 level. Now, anytime a company makes a new high, we can see right here at this level, basically around the 200 level, it has made a new high and broke through it finally. Now we're going to break down the trade. Now this is why I like Webull. It's so much cleaner and easier to make videos. So if you look here, you can compare here. Going down here, the high right here was around 192. That was a resistance level. It sold off drastically from 192 all the way down to 142. And just that pullback right there was pretty nasty. That went all the way down 25%. So for me, an easy trade here is we can see that it went to 193, broke through and made new high. Anytime a company does that, it makes new high, it's going to want to retest that level. And I think that's what's happening right now. So as you can see here, this is where the earnings came. It was trading at 186. It blasted all the way up to about 212. So that's about a 14% move up. So it went up 14%, and then it started pulling back. So you'll see around like 212, it pulled back to 200. That's 5% pullback. What I'm looking for right now is a pullback to this level, 193, 194, which is an 8 to 9% pullback. And it's already pulled back a good amount already. So let's see if we can go from 200 down to 193. That's another 3 to 5%, which is definitely not out of the question. And what we're looking for here is, can we get a bounce at this level right here? And the reason I chose that level is because when you zoom out to the 5-year, look what it lines up with. It lines up with the previous high, which is right there at 193. So what I'm looking to do now is I'm going to start dollar cost averaging in, If we can get that pullback coming down here, start chipping in around 196, 195, and then 193, a more heavier position. And then I'm going to look to trade it back to 200, which would be realistically like 205, like a 5 to 6% gain right there. And then for me, my stop loss is going to be break of this high. So what I'll do is I'll give it a little wiggle room, and I'm gonna buy around 194, 194, 193 dollar cost average in, and my stop loss will be below 190. So that gives me a defined stop. So if I have a cost basis of, let's say, 194, I'm going to cut my loss 4 points down to 190. But what I'm really trying to do is go from like 193 all the way back up to 205 to retest right here. And if you do that, that's 7 plus 8. That's like 13 points I'm trying to get versus risking 4 points. So I'm trying to make 6% on the trade. And then if you look here, if I had a cost average of 194 and I sold to 190, I'm risking 1.7, 1.8% to make 6%. So that's a 3-to-1 R, as they say. So what I'm trying to do is wait for the pullback. Let's see if it continues to pull back. I think we're starting to get some buyers coming in here because people are recognizing, hey, the 200 level. So I want to see is if this doesn't break 200 and it doesn't fade, then the trade just doesn't happen. But what I'm going to do is just be patient, wait if we can get and retest this level right here, this zone. As you can see, I'll make a rectangle just for more clarity. Right in this zone right here, which would be like about, just lower this a little bit, just to about that level. That's what I'm looking for. I want to see it come in this zone, the 195 to 193 level, because that was the new high that broke. So that's going to be the trade of the week. I'm going to wait and just see where it comes, set my alerts, 196, 195, 194, and start dollar cost averaging in. And if it cannot hold this 193 level, my stop loss is below 190, and that's it. All right, guys, always not financial advice, entertainment only. I trade on my portfolio. I show it under my playlist. Definitely check them out, the Trading P&L 2024, my investing ideas. Do your own research before you buy stocks and put your own money on the line. But if you do it with paper charting, that's a good way for you to practice too. I use real money, but I'm charting these and I'm showing you these real trades in real time. You can look at my Trading P&L where I'm up over 58,000 on the year day trading so far. Fidelity Index Funds ETFs where I make videos on that, and my long-term portfolio for everybody to see, and the trades I'm making in there, all free. Just want you to watch them, share them, and just support the channel if you can. I really appreciate it. Thanks for tuning in.